Real estate versus the stock market. Two of the most powerful wealth-building tools in history. But which one is right for you? In this video, we're breaking it all down. The pros, the cons, the myths, and the truths. All based on data, strategy, and real-life examples. Whether you're a first-time investor or already growing your portfolio, this guide will help you decide. Should you invest in property or in paper? Stay to the end for our custom investment decision matrix, and don't forget to grab your free financial planning tools. Links in the description. Like, subscribe, and hit that bell. We drop deep dive financial videos weekly. Want free stock or a high-yield savings account? Check out Chime, SoFi, and Robinhood below. Let's start with the big picture. Real estate is tangible. You can see it, touch it, live in it, rent it. Stocks, on the other hand, represent ownership in companies. Apple, Tesla, Amazon, and your gains come from price appreciation and dividends. Both are proven to grow wealth, but they behave differently and suit different people. Searches for how to invest in real estate and stock market for beginners have spiked 300% in the last 5 years. That tells us people want control but also simplicity. So how do we compare them? Let's dive into 6 categories: accessibility, returns, risk, taxes, time, commitment, scalability. Let's talk accessibility. How easy is it to get started? Real estate. You'll typically need a down payment of at least 3.5% to 20%. That's tens of thousands of dollars. You'll need good credit, stable income, and possibly approval from multiple parties. Even platforms like Fundrise or Roofstock require several hundred to several thousand dollars to get meaningful exposure. Stocks. You can start today, literally, with just $1. Open an account with Robinhood, Fidelity, or SoFi. Choose from thousands of companies and ETFs. No middlemen, no closing costs. Use Chime's high-yield savings account to build your investment fund with automatic savings. Comment below. How much cash would you realistically set aside to start investing today? $100? $10,000? Let's see where everyone's at. Let's talk numbers. How much can you make? Historical averages. Stocks. 7 to 10% annual returns after inflation, S&P 500 over 90 years. Real estate, 3–4% home price appreciation, plus 4 to 10% from rental income, depending on market. But there's more. With stocks, reinvested dividends supercharge your compounding. With real estate, leverage is your secret weapon. A 10% return on a $300K home with 20% down is a 50% return on your cash. But leverage cuts both ways. Lose your tenant or face a downturn, and you're still on the hook. Have you ever done the math on what your mortgage would be if interest rates went up 2%? Try it now in the comments. Spoiler, it's eye-opening. Risk. The part no one likes to talk about, but must. Stock market risks. Volatility. Company bankruptcy. Market corrections. But remember, index funds spread your risk across hundreds of companies. Diversification is your shield. Real estate risks. Market crashes, property damage, bad tenants. Liquidity issues. A property can sit empty. A stock you can sell in seconds. Mitigate risk by investing in REITs through Fidelity or SoFi if you want real estate exposure without physical property. Diversify your investments. Split between real estate and stock portfolios based on your risk profile. Use SoFi's free risk questionnaire to get started. Taxes can be a silent killer or your best friend. Real estate wins big here. Depreciation, mortgage interest deduction. 3-1 exchange, rental property write-offs. That means smart investors often pay less than you'd think. Stock investors pay capital gains, short or long-term. Dividends are taxable. No deductions unless in tax-advantaged accounts. TurboTax and H&R Block both offer advanced tax prep tools that handle real estate and investment income. Even rental depreciation and tax loss harvesting. Use the links below for up to 20% off TurboTax and H&R Block premium filing software. Time is money. So let's talk commitment. Real estate. You're dealing with showings, maintenance, tenants, leases, insurance. Even with a property manager, you're managing them. Expect 10 to 20 hours a month. Stocks, set and forget. With index funds or robo-advisors from SoFi or Fidelity, you can automate everything. Auto-invest monthly, rebalance quarterly. Done. For the time-conscious, the stock market is the clear winner. Now, let's zoom out. How scalable is each strategy? Real estate scales slower. You need more cash, more approvals, and more time per property. But leveraged properly, it can snowball. Think BRRRR method, multifamily, short-term rentals. Stocks scale lightning fast. Earn more, invest more. You can own 0.1% of Amazon or $1 worth. No paperwork, scaling is frictionless. Remember, both can make you wealthy, but one is more passive, the other more hands-on. Let's recap. Category: real estate, stock market. Accessibility: higher bar to entry. Easy, low-cost returns. Variable, leverage-based steady compounding. Risk physical plus market risk. Market volatility, taxes, deductible depreciation, capital gains, limited write-offs. Time commitment. High-low scalability. Slow, work faster. Your ideal strategy depends on your income, time, risk tolerance, and goals. Here's a simple decision matrix. New investor with low capital? Start with stocks via Robinhood or SoFi. Want passive income with leverage? Explore rental property with Fidelity's REIT options or hands-on buying. High-income earner? Real estate may offer better tax breaks. Limited time? Index investing is your best friend. Want both? Split 60-40 or 50-50 based on risk. There's no one-size-fits-all answer. The best investment is the one you'll stick with, consistently. Subscribe if you found this valuable. Comment below. Which side are you on? Real estate, stocks, or both? Links below for free stocks, savings accounts, and tax prep tools. Open a free investment account with Robinhood or SoFi today and get bonus stock just for signing up. Use Chime to automate your savings so you can invest faster. File smarter with TurboTax or H&R Block when tax season rolls around. This is your year. Build your strategy. Grow your wealth. Until next time, stay curious, stay consistent, and keep building.